What's going on, guys? Welcome to the stream. Glad to have you here. My name's Daily Crypto. You may or may not know me yet. Don't know if it shows my name anywhere in any of these boxes and don't know where we are streaming at, but glad to be on your mobile device, on your television screen, wherever you see me at. I'm here now, and today I have a pretty cool lesson for you. Today we're going over a series of unlocking some price action secrets. So we're going to be taking a look at, there's plenty of structures that we can analyze, but today we're going to be looking at two different types, the falling wedge and the rising wedge. So these are ones that I picked up because some of my favorite types of structures to trade. So I want to put you guys on game with what I like to trade. Now in the past, we've taken a look at trading strategies like the TCE, trade continue entry. So if we can find the reasons to enter a TCE trade outside of one of these reasonable setups, then it's almost going to be a guaranteed overnight trade. So I'm going to show you the basic principles and philosophies, fundamentals of creating chart structure and what you want to do at the high and the low end of the chart structure, what we're expecting when we see this, and how we can capitalize. All right, that's what's up, fellas. So let me see who's here, who's in the house. Nobody's in the house with me here on YouTube right now. That's okay. I'm a little late, but better late than never, as they say. So if we get anyone show up while I'm on stream, all you got to do is drop a question, slow me down. Sometimes I know I talk too fast, but if you have to watch the recording, feel free to drop into our Discord server. It's going to be somewhere, like, again, link should be below. I don't know where I'm pointing, but there's links somewhere in the description that will give you an access to our Discord server. So if you're like, yo, Deadly, I didn't get to make the live stream, but I have a question, drop your question in the server. I'll check you out whenever I can. So moving forward, when we have high points or low points, actually, let me get you start off on the right. All right, so now we should be able to see my screen. All right, so here we're going to be taking a look at link. Now, I've hand chosen a particular method here to a scenario where it looks favorable for the outcome I'm trying to teach you about. Not when you're looking through your chart, you're going to be rummaging through. It's like, oh, you go to XRP and you see that perfect falling wedge, or you know what I'm trying to say. It's not just like, all right, I want to trade. Oh, there's turn it on and there's the falling wedge. We can make money. So you got to find. That's the first step. So we have found this one here, and the more touches it has, the more reliable it is. We make projections based off 2 points. So if I come back over here to XRP and we're looking at the current market price here, I've made a projection off of the downtrend based off of that elevated high, and I've made one off of this low based off of those 2 low points. I've done it over here on DOT. So there's a couple different ways that we lay these lines down because they're there. This line stems from these 2 points. I didn't intend for this wedge to show up. It's just shown up. So some other instances with the SHIB, not really structured there. XMR, totally different, not the structure there. So whenever we see something like that, it's just because we lay trend lines down. Like even if I come back over here to XMR and I lay some trend lines down from the recent highs and recent lows, I'm going to get a different structure. So this is the structure I'm getting, right? So it's some type of wedge. It's not exactly the rising wedge we're looking at, more so like ascending, but in any case, it's this all we get from laying our trend line down on 2 points. That's it, and projecting it out. So whenever we get to a point in nature where we're projecting for 2 points and we get a structure like this gives us a type of falling wedge. So if we look at different structures that are available to us, there's a bunch of different ones. And today we're going to be looking at over here. It's going to be falling wedge, neutral, bullish only. Yo, what's up, boy Tamello? Greetings, bro, man. And I'd say Landry, hello there. Please, the sound is not the best. Sound is not the best. Not sure what else I can do about that. I mean, I got the mic right up to my face. Perhaps try to refresh. Let me see if I'm on 720. Make sure I'm should be on actually 1080. Settings, quality. Yeah, try to put the playback quality on 1080p. Maybe that'll help you a little bit. I think the standard is 720. That might help. I'm not sure. But if it sounds too terrible, let me know. I'll see what I can do. Otherwise, I'm just going to keep working on it. But anyway, or keep working on the string. But anyway, here what we're seeing, falling wedge and rising wedge here. So what dictates these structures, again, is going to be projected from 2 points. So what we're seeing, I'll minimize this now, and we can zoom in on the structure that is on our. So there's that falling wedge, and we're expecting a bullish outbreak. This is bullish only. We can definitely see where a wedge breaks from the downside support zone and trends lower. It's happened before, and I don't have any to show you right now, unfortunately. But it's happened in the past, and it will happen again. Clearly, what's going on here is we have a way to bet is going to be a break from this, which is possible selling pressure, or we're going to have a break from here, which is possible buying pressure. So if sellers can overwhelm the buyer support at this level, then it's going to break down. That's just basic philosophy. If buyers can overwhelm the sellers at this level, then it's going to break out. More buying pressure. That's just that's how it's going to occur. Basic philosophy. So we need to understand where we are in these structures. We can have downtrends, as we see here. There's a macro. I'll get rid of this for a moment. We can have macro downtrends, and as we can see here, even small little macro uptrends, different formations in the different structures. But what I want us to pay attention to right now is what we're going to be looking at is how we should trade the ball. So we've observed it, 2 points. Now we have a speculation. We know what price could range. Looking at point 1, point 2, point 3, 4, 5. So we get resistance touches up here and support down here. Now, whenever we are looking to trade this, normally, since it's a bullish occurrence, we're looking for a breakout to the upside. So the best scenarios where we can get in for a long on a breakout are going to be here in this range. So, I actually had those lines on without those. First, we have those projections. A second there. First, we have those projections based on just 2 points. And then the way I come up with the lines inside is I'll go ahead and I'll clone here. And then I'll just change one to a dashed line. So the one that was cloned, a dashed line. That way I know it keeps the same slope. If we try to draw a new trend line, it may possibly give you a different slope. So I know I'm getting the same slope there if I could just do that. Sorry, trying to mute my mic so I could clear my throat, but it didn't work. Anyway, I want to try and make that range where the wicks have been touched. So we see a wick in there, a couple wicks right there. So I want to make that, hard, dial it in as close as I can to make it tiny, and that's going to be entry range for shorts. For longs. Do that. Take a clone to the flip side. So boom. Now we have a breakout range for longs, entry range for shorts. Now down here, we're going to take and clone that, do the same thing. But we don't really want to trade the bottom breakout. So I'll try and touch there, make that range. It's a little larger than I want, but make sure it's plausible. So basically, I'm saying when price enters this range or enters this range, I'm looking to, if price enters this range, I'm looking to sell. If price enters this range, I'm looking to buy. And if price enters this range, possibly a breakout, I'm looking to buy. If I didn't already buy back here. Our best entries are going to be along this point right here, the bottom line. These are going to be our best entries for long. Now, wherever that ends up being, it could be, price may, in this instance, what happens, it doesn't do it. But if price comes back here, you see it touch that low and it comes into this zone, you're going to want to start looking for your entries right in that zone. Price could very well leave behind. If you try to wait towards the end, you'll get the best reward ratio. The price could leave you behind. So the bottom line here is the entry is going to be within that bottom solid line and the upper dashed line. That's your entry range. So you want to make that as small as can be, because here we could see the percent is 1%. Not too bad. So we have a 1% entry range. A lot can happen at 1%, but it's a 1% entry. And then we'll have our stop loss just below that range. So, which means if price comes out here and breaks down below, breaks that structure to the downside, well, you could end up seeing a lot more because it's not adhering to the structure. So essentially, we just want to be out of that position there whenever that is occurring. So we'll have our entry somewhere in there and stop loss right below. And then we'll look to take, depending upon where market structure is, you're going to want to look to recent highs for take profit targets and obviously the top of the structure. So if we were down here, it would be a smaller risk to reward ratio because there's less structure. Angles can always create something different. So depending on where we are, we want to set up multiple TP targets all the way up to where the breakout is going to potentially occur. Now, when price gets there, we say it does whatever it does, comes here, we enter, didn't get started, and then we come here. But now we see price fill or take profit and possibly some rejection here. So stop consider something that we have to be considerate of is people entering shorts. So while it could be a quick retracement and then we finally see that breakout, we don't want to prematurely get out of this position because we've wrote it from the best entry, right? Price actually does come and break out here. You can see that by the point of breakout, this person who took this trade already up 3% has wiggle room. And then the person who is now having to wait, and we're using the second range, the secondary breakout range, with the stop loss inside now of that short range. So over here, our stop loss is outside the strip. Now it's on the flip side of that range. So our entry would be somewhere here, and this guy's barely going to get into profits after breakout, whereas this guy's already been in profits. And then once we start picking up, some of these other highs, we could potentially go to here. We could potentially go to here, and even all the way up to here. So if drones are lucky to run all the way up to the top, and getting over that struggle, this guy's walking away with 20%, which is fantastic. And this guy's walking away with 22%. So in any different situation, it could end up being 10%, 15, 20% more at the bottom of the structure. Here, 3% is not a great difference. In any case, it's still a difference. So you want to try and retain as much profits as possible. Now, one more thing that we want to look at here is the stop loss, right? Because obviously, both of these stop losses are pretty close here. We can make them exactly the same for logic's sake. But look, okay, exactly the same. So this risk reward ratio is better. We see it has a higher risk reward ratio. But not only that, this stop loss is easier to achieve than this one. Because here we're seeing price range into new lows that weren't explored since over here inside of that structure. We could realistically see price reach this structure and trend left, where this stop loss is going to be much harder to achieve versus this stop loss because price was recently in that area. So anyway, long entry, the best entry for longs off this type of structure is going to be at the bottom. We don't know what price is going to enter or trade to, so we want to set up that lower range, and we're going to look for our entry along. And then for our delayed entry, long number 2, we're going to be looking to break out trade. So once it actually proves a breakout, comes up here and breaks out, boom. Whether it be straight and aggressive, we can jump straight in, wait for that retest, and take it like so. Because I have a picture here of what a quick aggressive break looks like. And there were a couple of structures here. There was a rising, falling wedge by those red dotted lines, as well as another wedge. In any case, there wasn't a retest here. So in that case, it shot. So depending upon how the break ends up being, it may have a pullback or it may be aggressive. It's going to be up to you on how you wanted to enter it, which is why, again, I'm arguing that the best entry is back here, pre-breakout. Because even if it retraces everything we so prime entry 1 at the bottom, prime entry 2 at the top, and now we're going to be looking at the short scenario. So let's say the breakout fails here, and I'll leave those on. I'll hide them, but I'll leave them on. So let's say price comes up here and the breakout fails, right? We see that it didn't come all the way out and it's retracing, or maybe it did break out and it failed to retest and it's re-entering. So this would be our entry range for shorts. So we could go ahead and put a short here with our stop loss now above the breakout range, right? Because we've been given a reasonable range what it is. And maybe price has also created a recent swing high. So if that was the recent swing high, you could even go above that. Use the market structure depending on where that is. If it's too far, it makes sense. You can use your range. So especially if it hasn't broke out. If it hasn't broke out, then it's still really good solid resistance. But if it has broke out and was a breakout failure, then maybe you look to use that. But the basic thing that I'm trying to get at here. Oh, I think I lost my screen. Okay, we're still all right. So yeah, from here, basically, the thing I'm trying to say is we want to look for our short range here. Now, the difference between longing from the bottom and shorting from the top is when you're longing from the top on a falling wedge, we're expecting a bullish outbreak. So if we're longing or shorting from the top on a bullish expectancy, that means we have to have an end in sight. So we're going to be looking at that low very closely and back to the structure here because we're not really expecting a breakout to the bottom. While it can occur, that's not really what we're expecting. So now whenever we look at this, I want you guys to understand the philosophy of this. The price stays inside. Once it floats along the bottom, you look for longs here. And when it floats along the top, you look for shorts until you get that breakout. So let's say we had that first long position open because we spotted this and then price came down in here and then boom, we got our long position filled. Now we're riding that up for profits. And we see that price is reversing here, so we entered our short, but we didn't close our long. So now if price comes in this direction towards the bottom, we can close the long or profits and have an open short for as long as it goes. Or we could keep that open short to see if it deviates below that long, and then we can close it here for profits while still having this long open. Or we can double, triple long, yada, yada, yada. Don't confuse you, but you can do a lot of things with trading. So understanding, even having these positions open against yourself is when it comes down from the top, it's profitable. You can close it at any point. And two profitable trades running against each other in different directions on the same structure. It's possible. You don't have to get that crazy with it, but it's possible. So, looking back at our opportunities here, we have look at them together. Long entry 1 from the bottom, long entry 2, breakout attempt, and then short entry 1 from the top. The best way to trade this is going to be from the bottom. So then if we look and see what happened here afterwards, also too, what I want you to note is infrastructure. Well, while I didn't have any lines on that infrastructure, I mentioned earlier to you that there were different trend lines. We can even see a little bit of a flag break, wedge break. But what I do have notably turned on, is I believe here. Because today I said we were going to talk about the rising wedge and the falling wedge. So look at that. We even had a wedge within the falling wedge structure. So that's what I was trying to tell you guys earlier. There's can be multiple structures even within a structure. So we have this rising wedge here, based off 2 points, looking to break support, looking at resistance. Now we would expect a downward break here. All the principles that I told you for this are going to be the same, but inverse. So now we can zoom in, and we can even use multiple time frame analysis now because we have that created. This is what I mean by multiple time frame analysis. We spot that on the 15 minutes, and we come into a smaller time frame. And then we can even use things like divergence to see if divergence, indicators, yada, yada, yada. But looking at the basic market structure, again, same thing, but inverse. Now we're expecting a downwards break. So the best entries for short are going to be along the top of that structure. We're going to want to enter in this range with a stop loss outside of that structure and take profit within the structure. And of course, if it breaks out to the downside, we can target other lows. So that is prime entry 1. We're shorting from the top. Prime entries on a rising. Close out of it. Okay, let me grab it again real quick. What's going on? Oh, there it is. It's on my other screen. Okay, so Prime entry on the falling wedge, we're looking to go bullish. So we want to long from the bottom or long at the breakout. Prime entry on a rising wedge, we're looking to go bearish. So we're shorting from the top. And then if we can manage to get like a breakout here, we can see it close in. We can put our entry right there with our stop loss right below that range. We could actually wait for it to poke out. Once it pokes out, then we can just go ahead and put the entry right there with our block inside of that range again. Or if we're comfortable with it, a recent high right there. So meaning if price comes out that high, we want to be out. So there's a lot of different things that can happen. But even so, even inside of, so like I was saying, even inside of here, we had that 100 lightning wedge, and I'll show you what happens here real quick. There we go. Sorry, there's some noise back there. I was wondering. So here we get, boom, trades along that line until it breaks. And then it comes out a little bit further. And if I can go to the 1H, I'm done. So you see with that little structure, the larger structure is a small breakdown. Price came some of those lows for a while. This one ended up coming almost all the way back down into that range before I go back up to the top and then breaks. Sorry, I definitely thought that was going to be faster. But anyway, it's starting to come there, and I thought I was going to be able to click faster, but I have a slow breakout on this one. So there was plenty of time for you to get in on that with a stop loss below, carry it up for some profitability. And in the end, I'll just go ahead and exit all the way so we don't have to stick in that. Oh, what happened? Goes all the way. So even over here, there's more macro trends, but ultimately we were listening to these goals here and trying to ride that target up. Even over here, we satisfied that final goal based on that wedge. So it doesn't always satisfy the goal. Like I said, sometimes it goes against the grain. This could have broken up. This could have broken down. Happens in plenty of different scenarios. And here we had a gradual breakout. That other picture I showed us, it wasn't so gradual. We had super tremendous breakout. Even the same asset, this was still linked. And even today, we're still looking at the link. And that was the fourth time. This is the one. Different movements different patterns can cause for different curve. But that is essentially what we're looking at today: how to trade rising wedges and falling wedges. So if anyone's here with me on the stream, I'll check YouTube for the comments. We got the comments on that. Some questions. If you have questions, type it into the comments, and I'll try to get them answered if I can right now. Before we head on that here. Just had a quick little lesson for you guys here today. We're going to be unlocking every single one of these. Damn, I closed it again. I'm sorry, guys. I don't know why I keep closing. There we go. Now we're going to be unlocking every single one of these, and I'm going to be walking real world examples. So today we just went through these that go hand in hand. I didn't want to do one without the other, so we knocked those two out. We still have so much more to cover, and we'll do it in different series. So don't jump the gun on those other structures. We'll get there. But if you have questions about this structure, let me know so we can talk about falling wedges and rising wedges today while we're on the YouTube stream. Let's see what we got. No, nothing. Oklahoma says hi. ZA wave rocket ship. Rocket ship. Yeah, I wish I had like a rocket ship blast off thing here. I don't have anything to blast off. I have something I can blast off, but not like a rocket ship. You know what I mean? Americans. I mean, but yeah, wait and see a couple more minutes if we have any questions on the structure setup. Make sure I'm not missing anything there. I know, again, sorry guys for being a little bit late. Cool, a couple people watching now. So we started the stream a little bit later today than expected. Both of us were having some things that we had to take care of. Having issues. And I was in some meetings, and that the timing was. So sorry we were late. Better late than never, as they say. Just jumping in. I already covered a whole super wonderful lesson, so I'm just gonna have to backtrack up on that. But right now, we were just giving it a couple more moments if anyone had any questions. Anybody? And if you're watching this recording, because I know I said this earlier at the beginning, but if you're watching this recording now, this isn't recording, this is live. But it will be recording, and if you're watching the recording and you have questions, join into the Discord. And you can just ping me at Daily Crypto or ask anyone else there too. Like, yo, I was watching the stream earlier and I had questions about the rising wedge stuff or the just because you miss a stream doesn't mean you have to not ask a question. I'm really not attentive to the YouTube platforms or whatever other streaming platforms we may be reaching one right now. So I'm just one of the analysts here on the team. So I don't have back-end access to anything like that. If you want to come to the Discord and ask your questions there after the stream, there I got that. So if no one has any more questions then. Boy Tamela says he's all good. Don't see any more comments. We'll go ahead and wrap it up for today. Thank you all for coming out. If you're into the live stream, if you're watching this lesson, it's a really good one. So I hope someone's watching the recording. Toodaloo, fellas. We'll see you all at the next one.